just the second time since its IPO, Cerebras reported quarterly earnings yesterday after the closing bell, offering some investors growth that was slower than anticipated. Shares down 13.4%. I think that's on track for the biggest drop since the last week of June. Cerebras CEO Andrew Feldman joins us now. The first thing that I learned was there is a business renting out compute capacity that's still there. Could you give me the backstory on that, Andrew?
Oh, of course. There's a huge business of renting out compute capacity. I think it's what the neoclouds do. It's what the hyperscalers do. It's a very profitable business.
And is it outpacing the growth from the business of selling the hardware direct to others?
Well, we have two parts of our business. We have a first-party cloud. That means we design, manufacture, and deploy equipment in our own data centers, and we rent it out to our customers. That part of the business was up 281% year over year. Huge growth, huge growth. Now, in that part of the business, we control the data centers. There was another part of our business where we sell our AI hardware to customers who want to do the exact same thing, who want to deploy the equipment and either use it for themselves or break it up into little pieces and sell the compute to various customers, right? Those customers, we call that our hardware business. We're selling hardware for their premise. And in Q2, some of our customers didn't have data centers available, so we were able to deliver less to them. And so right now, data centers are a challenge for everybody. We had some. We were able to deploy them for our own use and for the use of our cloud customers, our first-party cloud customers. And so that business is absolutely ripping.
We're live on Bloomberg Television and radio with Cerebras CEO Andrew Feldman. And the reason I asked for the backstory on that is that cloud business was born out of needing to build data center capacity to test the technology worked. It seems to be working.
It was. You know, we wanted to be able to provide demonstrations to customers without having to move hardware to their facilities. We didn't have a hyperscale customer at that time, and so there was a need to find a way to deliver compute services to people who didn't have a data center, didn't have a way to otherwise enjoy our blisteringly fast AI hardware. And so we set it up at first for ourselves and then for demonstrations, and there was so much demand on it over time that it's become a big business for us. And last quarter, Q2, it was an extraordinary business for us. And we expect it to continue to grow at tremendous rate. Now, even though now we have hyperscale customers like AWS, now that we have frontier labs like OpenAI, that business continues to grow at exceptional rates.
Okay, the hardware business, there is some confusion out there. You report on a core basis, which showed that the hardware division was up, right? On a GAAP or non-core basis, it would be otherwise. Just explain the story for the hardware business.
The story is one of our large hardware customers had some warrants, and those warrants are subtracted from revenue. The value of those warrants are subtracted from revenue in GAAP accounting. And so it made the numbers look a little smaller than they were actually.
Demand is great. It's there. There is a backlog. We know about
it. Ed. We've got 25.4 billion in backlog.
So here is the data that people are really searching for with Cerebras, which is how can you get the capacity in place faster, both on your own data centers or to get the hardware into the hands of customers for theirs?
Right. And that's a fair question. What we said on our call yesterday is that we had signed up or had already live 600 megawatts of capacity, and that we had a pipeline of gigawatts of additional capacity. And what we said was that we expect our revenue to more than triple next year. And so I think we have been executing at a tremendous rate. Adding 600 megawatts in several months, 6 or 7 months is no small feat. And we will add vastly more in the months to come. And so I think we are ahead of plan. We beat guidance and we beat consensus on the things on our core business, on core revenue, core gross margins, and beat by a lot on core operating margins. And then we guided a big raise, so for 2027 and 28. So we feel really good about the business, and are proud of last quarter's results.
Andrew, what are the biggest factors on the supply chain side or on the operations side that are impacting your ability to deploy that capacity?
So there are several things you need to do on the supply chain, right? First, we just talked about data centers. You need a place to put your equipment so you can build the cloud so that you can deliver it to your customers. Walking back upstream, you need manufacturing capacity, and we've expanded our capacity by partnering with Flextronics and Sanmina and Rocket EMS. We will this year increase manufacturing capacity by more than 10x. Walking further back upstream, you have to work with your fab partner. Our partner is TSMC, and they have assured us supply that will support our growth. And so we've systematically worked each of these components in a field we call capacity, to have more chips, more manufacturing capacity, more data centers to put these chips to build the cloud offering.
The stock's down 14% right now as you and I are talking. Since the IPO, it's performed. I think the stock was up 42% from yesterday's close. Is lockup expiry a factor here? We talked earlier in the program about SpaceX's lockup and the mechanics of that. Would you say that you see an impact of that in your case?
We do. There are lockups that are expiring, and there are people who invest against those. Those aren't the investors that we're focused on. We're focused on long-term investors. We're focused on delivering returns through investing in our people, in our technology, that will play out over years. And when you guide to more than a triple next year, and say that 28 is going to be giant, and 29 as well, we're trying to speak to people who want to be with us on this ride, and right, who want to be in the AI business, and want alternatives to say NVIDIA, and that's who we're talking to.
Andrew, I appreciate it's only been a few weeks since this was announced and you were on the show, but how's it going with AMD? Are engineering teams already working together? Have you moved quickly on that?
I enjoyed that conversation when you had me on your show a few weeks ago. I appreciate that. And it is, Lisa Su and Mark Papermaster, they acquired my last company, and I had an opportunity to work with them for several years, and I enjoyed it a great deal. We have a good relationship there, and we have disaggregated solutions running in our labs. We have close engineering relationships. These are talented engineers on both sides, working extremely hard, and we will have deployments in the fourth quarter.
And very quickly, there was customer demand after the announcement.
There is enormous customer demand. Disaggregated solution provides the best of both worlds. It allows GPUs to go faster. GPUs are good at throughput and not so good at speed. They allow GPUs to go faster, and Cerebras, which is really good at speed, and we can improve in throughput. And so the disaggregated solution gives a faster, high throughput solution. And that gives you both the economics, which is throughput, and the customer experience, which is speed.